Scene script. Ever dreamed of financial freedom? Imagine a life where money works for you, rather than you working for money. Welcome to a world where the tables are turned, where you're the boss and your money is your hardest working employee. This isn't a fantasy, it's financial freedom, and it's achievable by anyone who's ready to embrace the power of investing. Investing is the cornerstone of financial freedom. It's a journey that transforms your hard-earned cash into a growing wealth engine. And while there are numerous paths to embark on this journey, today, we'll spotlight a particular vehicle that has the potential to take you there. It's called VOO, or the Vanguard S&P 500 ETF. Before we delve deeper, let's hear from one of the most successful investors of all time, Warren Buffett. He once said, "The stock market is a device for transferring money from the impatient to the patient." Now, why is this quote important? It's because investing isn't about quick riches, it's about patience, consistency, and time. And VOO embodies these principles perfectly. VOO is an exchange-traded fund that aims to track the performance of the S&P 500 index, which comprises 500 of the largest U.S. companies. Think of it as a vehicle that allows you to invest in a vast segment of the U.S. economy, all in one go. But why VOO? Well, it's because of its simplicity, accessibility, and its proven track record of steady long-term growth. It's a vehicle that's well-suited for both beginners stepping onto the investment highway and seasoned investors cruising on the road to financial freedom. But remember, the journey to financial freedom isn't a sprint, it's a marathon. And like any marathon, it's not about speed, it's about endurance, strategy, and steady progress. It's about understanding the power of time, the magic of compounding, and the strength of consistent investing, whether through dollar-cost averaging or lump-sum investing. Ready to learn how VOO can be your golden ticket to financial freedom? Buckle up, this ride is just getting started. VOO! Sounds like a magic spell, doesn't it? Well, in the world of investing, it sort of is. Let's peel back the curtain and reveal the wizardry behind this financial acronym. VOO is an exchange-traded fund, or ETF. It's not just any ETF, but one that mimics the performance of the S&P 500. For the uninitiated, the S&P 500 is a stock market index that tracks the 500 largest companies listed on the U.S. stock exchanges. So when you invest in VOO, you're essentially buying a tiny piece of these 500 behemoth companies, all in one fell swoop. It's like owning a miniaturized version of the U.S. economy in your pocket. And here's the catch. Because VOO is an index fund, it's designed to be a set-it-and-forget-it type of investment. There's no need for constant monitoring or nerve-wracking decision-making. Let's talk numbers. Historically, the S&P 500, and by extension VOO, has returned an average of 7 to 10% annually, after adjusting for inflation. This means that if you had invested $10,000 in VOO 10 years ago, your investment would now be worth somewhere in the ballpark of $20,000. Not too shabby for a lazy approach to investing, right? But the magic of VOO doesn't stop at its performance. It also offers the advantages of diversification and low cost. Remember, it's not wise to stake your financial future on a single stock. As Warren Buffett once quipped, diversification is a protection against ignorance. With VOO, you spread your investment across a wide array of sectors and companies, thereby reducing your risk. And what about cost? Well, VOO boasts an impressively low expense ratio, which means more of your money stays invested and grows over time. To bring this to life, imagine a pie. A single slice might be tasty, but wouldn't you rather have a piece of every flavor on offer? That's what VOO offers. A slice of the entire U.S. stock market pie. As the saying goes, don't put all your eggs in one basket. With VOO, you spread your eggs across 500 of the biggest baskets in the U.S. You've got some money and you're ready to invest in VOO, but should you dive in all at once or wade in gradually? Here, we'll explore two common strategies: dollar cost averaging and lump sum investing. Let's break them down and understand how each impacts your VOO investment. First, consider dollar cost averaging. Imagine you're a sailor navigating choppy waters. You don't plunge headfirst into the ocean, do you? No, you dip your toes in bit by bit. That's exactly what dollar cost averaging is all about. Instead of investing a large amount of money all at once, you spread your investment over time, buying more when prices are low and less when they're high. This method reduces the risk of investing a large amount at the wrong time. Let's say you've got $2,000 ready to invest in VOO. Instead of investing it all at once, you decide to invest $200 every month for 10 months. As the price of VOO fluctuates, some months you'll buy more shares and some months you'll buy less. This strategy helps to smooth out the effects of market volatility. On the other hand, we have lump sum investing. This is like jumping into the pool all at once. You invest a large sum of money at one time, hoping the timing is right. If the market is about to go on a bull run, this method can maximize your returns. However, it also comes with the risk of investing at the peak of the market. So, what's the verdict? Well, it depends. If you're a risk taker with a knack for timing the market, lump sum investing could be your path. But if you prefer to play it safe, dollar cost averaging offers a steady and less risky way to grow your investment. Remember, the best time to invest was 20 years ago. The second best time is now. Chinese proverb. Whether you decide to invest a lump sum or dollar cost average, the key is to start investing. Ever heard of the eighth wonder of the world? It's not a monument or a natural phenomenon, it's the power of compounding. Now you might be wondering, what does this have to do with investing in VOO? Well, hold on to your hats, folks, because we're about to dive deep into the magic of compounding. Imagine you're planting a tree. You water it, give it sunlight, and over time it grows. But it's not just the tree that grows, every leaf, branch, and piece of fruit that sprouts from that tree also grows. That's compounding in nature. In the world of investing, it works in a similar way. Let's say you start investing a small amount in VOO every month. Each investment is like a seed you've planted. Over time, these seeds grow, but they don't just grow in size, they also produce more seeds. These new seeds are your returns, and they too start growing and producing even more seeds. That's compounding in action. To put it in numbers, suppose you start investing $100 every month in VOO. After a year, you've invested $1,200. But thanks to the growth of the market and the power of compounding, your investment might have grown to $1,300. That's an extra $100 you've earned without lifting a finger. Now imagine keeping this up for 20, 30, 40 years. Those small monthly investments and the growth they experience can add up to a substantial sum, all thanks to the power of compounding. Remember, the key to making compounding work for you is time. The longer you stay invested, the more time compounding has to work its magic. It's like a snowball rolling down a hill. The longer it rolls, the bigger it gets. Albert Einstein said, "Compound interest is the eighth wonder of the world. He who understands it earns it, he who doesn't pays it." So, are you ready to earn it? So, you've learned about VOO, dollar cost averaging, and the power of compounding. What's next? Well, let's summarize. VOO, the Vanguard S&P 500 ETF, is an effortless way to diversify your portfolio. It's like a smorgasbord of the 500 biggest companies in the United States, all in one neat package. And because it's an index fund, it's a low-cost way to ride the wave of the market, without needing to pick individual stocks. But investing in VOO isn't about quick riches, it's about a steady, reliable journey to financial freedom. Remember the story of the tortoise and the hare? Slow and steady wins the race. Now, dollar cost averaging. It sounds technical, but it's really quite simple. It's about investing a fixed amount regularly, regardless of the market's ups and downs. It's like watering a plant. You don't drown it all at once. You give it a little each day, and over time, it grows. And this brings us to the power of compounding, the secret sauce that supercharges your investment. It's what happens when your earnings start earning. As Albert Einstein once said, "Compound interest is the eighth wonder of the world. He who understands it earns it, he who doesn't pays it." But here's the thing. Financial freedom isn't a destination, it's a journey. It's about making wise and consistent investment decisions. It's about discipline, patience, and a long-term view. So what's your first step? Maybe it's setting up a regular investment plan. Maybe it's buying your first share of VOO. But whatever it is, make it count. Because every step you take on this journey brings you closer to financial freedom. As the legendary investor Warren Buffett once said, "Someone is sitting in the shade today because someone planted a tree a long time ago." So, plant your tree, nurture it, and one day you'll enjoy the shade. Remember, the journey of 1,000 miles begins with one step. Your journey to financial freedom begins with that first investment. So, why not make it VOO?